The S&P 500 finished flat on the week. The Nasdaq gained about 2%. But the real story? Semiconductors got taken out behind the woodshed, then exploded 8% higher in a single session. And one of the most talked about AI funds in the world blew up at the exact bottom. Two trades, completely opposite moves. And both of them are trying to tell you something. If you're new around here, do me a favor. Hit subscribe. The free weekly market note is linked in the description. No paywall, no spam, just the note. Let's run the week that was. Monday, everything was fine. SOX was chugging along. NVDA was holding $200. Nobody suspected what was coming. Then Tuesday happened. The SOX dropped 4.5%. Wednesday, another 5%. 12% from the highs in 2 days. Names that had been leading all year. NVDA, AVGO, AMD, all got crushed. People started saying AI bubble. People started calling top. Here's what actually happened. It wasn't the fundamentals that broke. It was the positioning. AI had been the most crowded trade on the planet for 2 years. Everyone on the same side of the boat. And when everyone tries to get off at once, the boat tips. That's not a bubble popping. That's what happens when a trade gets too crowded, too fast. Then Thursday. From the depths of Wednesday's low, two things hit at the same time. First, China stimulus out of the Politburo meeting. Big, unexpected, market-friendly. Second, after 2 days of panic, the short side was packed. A little good news, a lot of short covering, and boom. SOX explodes 8% in a single session. Equipment names leading the charge. LRCX up 20%. AMAT up 15%. But here's the problem. An 8% rally sounds great, until you remember the index dropped 10% in the 2 days before. Do the math, we're still down. And on the charts? The SOX closed Friday at 11,311, still 400 points below the short-term line at 11,756. That's not a reversal. That's a bounce. A big bounce, sure, but a bounce nonetheless. Pull up the SOX daily chart, price at 11,311, short-term at 11,756, mid-term at 12,313, long-term at 10,873. Prices below both the short and mid-term trends. That's bearish alignment. The long-term at 10,073 held on Wednesday's washout. That's the floor. If that breaks, the conversation changes. NVDA tells a similar story, just less extreme. Closed at 275, up about 2% on the week. The midterm is at 205.75, the short-term at 202.41. Price is below both. The long-term, $199.21. Wednesday's low was 190.01. It overshot, then rallied back to close right on the line. That's a tell. If 199 holds next week, the uptrend is intact. If it breaks, the next real support is lower channel territory. Now let's talk about the story everyone was sharing this week. The 25-year-old former OpenAI researcher who ran an AI hedge fund, Leopold Aschenbrenner. His fund, Situational Awareness, was up 439% last year. Billions under management. He was levered long AI names, all in. Then this week happened, margin calls, forced selling. The entire fund liquidated, sold to Citadel at the bottom. The guy was right about AI, right about the trend, dead wrong about leverage. Direction doesn't matter if you can't survive the path. That's not a side note. That's the most important lesson of the week. The smartest guy in the room, the 439% return, the billions in capital. None of it matters if you blow up on one drawdown. Here's my read on next week. 2 levels that decide everything. First, SOX reclaiming 11,756, the short-term line. If we get a daily close above it with volume, the bounce has legs. The lows are probably in. If we can't, if we roll over from here, that 8% rally was just a dead cat bounce, and lower lows are coming. Second, NVDA holding $119, the long-term line. This is the most important chart in the market right now. The entire AI trade rides on it. Holds a say, uptrend intact. Breaks, yes, everything gets repriced. Risk board. SOX below ST and MT steers bearish structure until proven otherwise. NVDA sitting on the LT line, not above it. Vulnerability, not strength. The Leopold blowup means a lot of forced selling is done, but also means levered long exposure got cleaned out, which removes a bid from the market. China stimulus is real but unclear in scope, and August is historically a terrible month for stocks. Low liquidity, big swings. Trade the setup you see, not the one you want. Don't chase an 8% rally. Don't short a V-shaped bounce. Wait for either a pullback to support that holds or a clean breakout with volume. Either one gives you a trade you can defend. Cash is still a position. Trade safe.